Good morning, it's Jessica with Beta Virtual Assistants, and I'm here because it is Saturday, and on Saturdays we like to talk about crypto and about investing and about how you can be safer with your crypto investing or about some things you might avoid and all that sort of thing. So it's been an interesting week in crypto this week. There was one point where Bitcoin shot straight up, and then there was another point where it shot straight down, and then there were people who, there's all these predictions all the time. And so one of the gurus I follow is saying if we miss a certain line, we're going to hit 20,000 with Bitcoin, which right now it's around 25, 26,000. So we could see 20,000 again, which would be awesome because I like buying Bitcoin when it's on sale. But you don't know when it's going to be on sale, and you don't know if it's going to be on sale and go on sale further, which is kind of a problem. But I've seen other people this week talking about the halving coming, which is a big deal. When the halving comes, as I understand it, the Bitcoin that is mined pays out a certain rate. And when the halving happens, it pays out half as much to get mined or something like that. And supposedly that's going to make it worth more. And maybe, who knows, because you have to work twice as hard to get it. So I guess that would make sense to make it worth more. But there's always a lot of predictions about the halving, and in fact, when I got into crypto, which was back in 2021, the talk was all about the halving back then, even though the halving was so far away, and I think the halving must have just happened, maybe. I'm still a little confused on the timeline, but in any case, so when the halving happens and it goes up, so there's predictions right now of people saying, oh, it's going to get 140,000 per Bitcoin, which would be kind of amazing if you think about it, because right now, if you can get a Bitcoin for 25,000, and then in 2024, when the halving happens, you can sell that same Bitcoin for 140,000, that would be quite a return on your investment and totally worth it. But in the meantime, you have to ride the volatility, and Bitcoin and all the other cryptos, it seems like all the cryptos follow where Bitcoin leads. So when Bitcoin's going up and then down and craziness, just in the last year, it has been, I think, maybe in the last 2 years. Yeah, in the fall of 2021, it was up near 60,000, maybe even hitting 70,000, and then it fell down to 16,000. I mean, this is crazy volatile. And for certain, if you are investing in Bitcoin and crypto, you definitely do not want to buy once and hope for the best. Maybe. If you're going to invest in crypto and Bitcoin, definitely want to do it with funds that you don't care what happens to them for a few years, because over the long term, Bitcoin has been proven to pay off. But if you bought in November of 2021 for 70,000, you are still sitting on a loss almost 2 years later. And now if it's going to go hit 20,000 again, it's like, I mean, Bitcoin is one of those coins that's really great if you can figure out the emotional side of this. To buy it when you think it's low and then sell it when it gets higher and then buy it again and then sell it again and buy it and sell it. You can make a lot of money trading the swings of Bitcoin. But if you're like me and you don't have time to watch the markets and you are not quite sure about your emotions, it's really easy for me to buy stocks and hold on to them for a long time and not worry about them because I don't have the time to go check on them every day. And I know that over time, the stock market goes up. And I think over time, the crypto market is also going to go up, but you do have to invest in solid projects that have a good history and have a good future. Not just a history, but a good future so that you can make money. So one of my favorite strategies, which I talk about here fairly often on this Facebook Live, is dollar cost averaging. So dollar cost averaging is just being disciplined enough to say, you know what? I'm going to buy a little bit of Bitcoin every single day or every single week. And some weeks I'm going to pay more for it and I'm going to get less. And some weeks Bitcoin will be on sale. Like, for instance, yesterday Bitcoin was on sale and I will get more for my buck than I did the previous day or the previous week or whatever. So one of my favorite companies that does this is called Swan Bitcoin. And actually, I have a link. If you're interested in purchasing Bitcoin regularly with no hassle, check out this link. So the way Swan Bitcoin works is you decide how much you want to invest, and then it will buy a little bit every single day. So for instance, I have $70 pulled out of my bank account every week. And then every single day I have $10 of Bitcoin bought, no matter what the price is, no matter what's going on in the market. And then that takes all the emotion out. I'm not worried about, oh my God, it's on sale, I have to get more. And I'm not worried about, oh my God, it's gone way up this week and now I'm getting less for my money. It's just like, you know what? It's set and forget and done. And this works a lot better than trying to do it on your own. So for a while, I was trying to also dollar cost average into Ethereum because Ethereum is another crypto that I believe is around for the long term. It's got a lot of blockchains and apps and all sorts of things built on it. They settle the MasterCards and the Visa transactions on it and all sorts of things. So it's really used and common, and I think it's here for the long term. So I was like, okay, I'm going to buy $10 of Ethereum every day, but I didn't want to pay the extra fees that some exchanges charge if you want to do dollar cost averaging. So it's a service, right? If you want to dollar cost average and you don't want to think about it, you have to pay for one of these services that is going to be like, okay, we're buying $10 of Ethereum and today and Monday, Tuesday, Wednesday, Thursday, Friday, buying $10 of Ethereum. In the exchange that I was in, which I think was Gemini, I think they did have a dollar cost averaging program, but it was like, I forget how much it was, but I was like, I don't want to pay that much when I can just like sign in every day and buy $10 of Ethereum. Yeah, guess what happened? I did not sign in every day. There were days when I got scared off because the market was crappy, or there were days when I completely forgot. And pretty soon I ran out of funds in my account. So then I couldn't buy more Ethereum unless I moved more funds in and all this stuff. And because it wasn't automated, I really did not do very well on dollar cost averaging and buying a little bit of Ethereum. So if you can go for a service, yes, it might cost a little more. Swan is actually pretty good because they only charge, forget how much it is, but it was like, when I first started, they were doing pay all of your fees for the year and then you don't have to worry about it. And it was like $70 for the whole year, where they would buy me $10 of Bitcoin every day. And I was like, yes, I'm doing that. I think now they are charging per transaction, but it's something like 1% or something very small so that you don't have to pay too much. Some of these others, like I mentioned, do charge more. I have seen people dollar cost averaging in Binance and in Coinbase and in Gemini, so it's definitely out there. Look into it. See if it's worth it. There might be dollar cost averaging for other coins that you might believe in. I don't know if any in particular are terribly good. It's hard to say what's going to last and what's going to fail. For instance, if you look at Dogecoin, it's like such a meme coin. You're like, what is the use of this coin? And yet it has stuck around for a long time, and it has made some people some good money, especially if they can follow the tweets of Elon Musk, because it seems like every time Elon Musk tweets about it, it goes way up, and then if you sold really quick, you could like make a few bucks. XRP may be another good one to dollar cost average into, now that the case with the SEC hasn't been completely resolved, but it is definitely leaning towards XRP in terms of favor, which brings up another thing that happened this week where there's a case against the SEC blocking ETFs for some cryptos. And obviously I know a lot about it. It's interesting that the SEC tried to block it and the courts have overturned that, and they said you were being wishy-washy or willy-nilly and you can't just block it just because you feel like it. So it looks like it's very possible that there are going to be some ETFs coming into crypto in the future, which made crypto jump this week. And then something happened a couple days later and it made crypto fall. Yeah, like I said, if you can ride the trends, if you can if you can catch it early when there's a decision against the SEC and for crypto, and then ride it up and then sell real quick and ride it down again, or sell it short or something. But of course, if there are ETFs, that makes it easier for the regular investor to get invested in crypto. I don't trust ETFs very much just because the first time I purchased Bitcoin was back in 2017, very end of that particular bull market. And I bought it. I didn't know how to get into crypto with the exchanges and all that sort of thing. So I ended up doing it with Grayscale Trust Fund. It's not quite an ETF, but it's a trust fund. And I bought it, and you know, the performance of the trust fund as compared to the crypto is very, very different because there are different securities. Crypto is like crazy up and down, and this trust fund or whatever was trying to follow it, wasn't exactly following it. I ended up getting really frustrated with it and selling out of it at the very, very bottom. I've actually looked it up. And the week that Bitcoin bottomed out is the week that I was like, okay, it's December and I have a loss in this stupid Bitcoin trust fund and I need to offset some other gains I had in other stocks. So I sold it and I got out of it. But kind of funny because I have really great timing when it comes to crypto. And maybe you do too. And that is why I do the dollar cost averaging every single day. I don't worry about it. It's just done. I have bought Bitcoin when it was $60,000 or $70,000, and I have bought Bitcoin when it was like 16,000 or something like that. So I bought some then. And the point being, if you're buying it over time, those purchases average out so that if you can't time the market, like I can't, if you decided to put all your money in when Bitcoin's at 70,000 and you're still sitting on a loss 2 years later, at least if you're dollar cost averaging in, you got some of those 16,000 purchases, and that helps bring your overall cost down so that eventually when Bitcoin goes up, it'll be easier for you to start realizing a profit because you have purchases that were at the lower end. Or, if you can set up your purchases and sales so that there's all these different tax methods, at least in the United States and in many countries, like first in, first out, last in, first out, highest in, first out. If you used highest in, first out, and you sold some of your Bitcoin so you could invest in other projects or something, and you told it to use the highest cost first out, that means you're going to realize a loss on those purchases of 70,000, which is great because that'll offset some of your other taxes. And then the rest of your Bitcoin can grow and become long-term, hopefully, and all that sort of thing. So it's all good. So dollar cost averaging, I talk about it frequently, but I think it's a really smart strategy. And if you have questions about it, we are here all the time. We're here on Tuesdays and Thursdays at 4 talking about taxes and how cryptocurrencies affect that and all that sort of thing. We are also here on Saturdays talking about strategies and how you can invest, how you can be safe. If you didn't see it this week, there was an interesting video that we posted about a friend of ours who had a terrible banking experience, partly because she's invested in crypto, but partly because banks are moving towards this central bank digital currency. And especially in Australia, they are trying to shut down all of the banks and only do cashless transactions. So debit cards and ATMs and all that sort of thing. And they don't want to give you cash, number one. But number two, if they control everything and you want to do something with your money and they don't think it's safe or they don't approve, I mean, what right does the bank have to tell you that a transaction that you're making, especially if it's a business related transaction that you've vetted and all that sort of thing, what right do they have to tell you that you can't make that transaction? I mean, it's really interesting when banks, like during the Canadian trucker protests last winter, when the truckers were protesting the vaccine mandates and they shut down their banking access. It's a very scary world that we're living in if banks can do that to you just because you believe something different than whatever they've been told to believe by the banks or by the government or whatever. Anyways, watch that video. It's somewhere on our page. And we're always here for your questions. You can message us and all that sort of thing. And in the meantime, I think somebody has been making pancakes again and I'm really hungry. So I'm going to sign off. Have a great Saturday and we'll see you another time.